All right, ladies and gentlemen, good evening. Today we are going to review a couple of just basic technical analysis skills using the Mt4 platform. This particular session, this particular video is focused on beginners and just overall using just the candlesticks in order to predict price movement. Of course, indicators can help you, but what you really want to know is the core, what's going on in the core of the market. So you really want to focus on price action. So this video is mainly targeted to beginners, people who are fresh, people who are just getting started, as well as those who are already experienced in the market but have a hard time understanding price action due to the fact that they use so many different indicators out there. This is just pure naked chart work, and I'm not talking about being at the computer naked. I'm talking about a naked chart with nothing but the financial price, the ticker, the candlesticks, and using technical analysis skills. So first, I'm just going to point out a couple features here on Mt4 for the beginners who've never used the platform, just to show you guys how to move around, how to maneuver the actual platform. The template you're looking at is the official currency matrix template. It is free. You can download the expert advisor and install the unique license. It is a free template that will be available to you guys upon the release of all the templates. All right, and I'm just going to point out a few things here. Of course, we have the candlesticks on our chart. A white candle symbolizes a candlestick that closed lower than which it opened. A green candlestick is indicating a candle which closed above the level in which it opened at. Okay, the gray wicks on each candle is where price tried or experienced price during that particular time frame or that particular candle. Each candle is a individual trading period, okay, all the way out to the monthly time frame, all the way down to the 1 minute. Each candle is an individual trading period, okay? So what I'm going to do here is I'm going to go ahead and go all the way out to the monthly, because this is where I like to begin my analysis. The monthly, if you can, when you're using the charts, you can either have those separators on there or you can take them off. I like to keep them on because they give me different trading periods and trading phases. What I mean by that is a trading phase is horizontal to horizontal line here on the monthly chart indicates a full year. So there's 12 candlesticks in between each of these period blocks on the monthly time frame. If you go into the weekly, there's 52 because each period bar or separator here represents a year as well. So the monthly and the weekly represent years, except if you're looking at the monthly, you're going to see 12 candlesticks in each period. If you're looking at the weekly, you're going to see 52 in each period. All right, if you go to the daily, you're going to see that particular month because it's broken down in months. So typically you're going to see anywhere from 28 in February to 30 candlesticks in between these periods. 4 hour indicates a full week. So that's full 7 days of market cycle. The 1 minute or full 5 days of market cycle. The 1 hour shows 24 hours, and every time frame below the hour shows a 24-hour period. All right. So starting with the monthly, well, let me go ahead and go over some features up here at the top. Here you can, here's new order. This is where you enter your volume. For beginners, I always recommend starting with a penny, no matter whatever your account balance is, start with a penny until you get familiar so you're not just losing money. Unless you're on demo, you can play around with the volumes to get an idea of what profit can be made. Here's where you enter your stop loss, your targets, or your take profits, and you'll enter market execution. Whenever I send out an alert, you want to make sure your entry is here. These numbers here, this 925, 92356, 9236, those are where you want to make sure your price is within the range of the alert that I send out. So if you're trading just off the alerts and you come in here to enter one of those particular trades, make sure your market execution price is within the range of the alert that's given. Your stop loss here, your take profit here, you would enter buy or sell. Okay, make sure you're at market execution, not pending order. All right. And that's just by clicking new order. You can also hit it up here in tools and go to new order. File is where new chart is where you'll select your different currencies. F majors, you know, the top 6 or 7 majors, all including the USD, your indices, your futures, which is just the dollar. Most brokers are only going to have the dollar as a future. Your crosses are any cross pair that does not consist of the USD, your energy like oil, your metals like gold, and your cryptocurrency. If you don't see it here, you may need to come over here and press view and go to symbols. And then you can highlight each particular one, look for what you're looking for, make sure it's toggled on, and it'll appear on your new chart when you come here. All right, insert is where you would insert different indicators. This is where you'll get your lines, your horizontal, your vertical lines, your boxes, your rectangles, your triangles. You can have arrows, your Fibonacci's in here. We'll get to that later, but this is just where you'll find all your tools. All right. Now, if you have installed one of my expert advisors to auto trade, which will be available in the future, you'll always want to make sure that this auto trading is toggled on, or your trades will not be copied. All right, auto trader on, off on, off on, off on. All right, this over here is where you'll change your candlestick or your data recognition. You can have bars, you can have candlesticks, or you can have a line chart. So you can have a bar chart, a candlestick chart, or a line chart, whichever you prefer. Of course, I'm on the candles because that's where the patterns lie the most. All right, zoom in, zoom out. That's pretty basic. You can have multiple windows open. Here's your chart shifts. I'll keep these on, but you want to take it off if you're looking to go back, but I keep them on. Don't use the indicator list. That's just if you want to see your indicators again over here instead of going to insert, just another route to get to your indicators. Here's your trading period. You can change your trading period there. Arrows, your toggles, and here's also the objects if you don't want to come over here to insert and look for the lines there. All right. So as far as my actual on-screen template, down at the bottom, you'll see the date. Up here on the right, you get an idea of the open, high, low, and the previous close and current price. OLHC, you'll see that often when you go into your settings and I ask you to show OLHC, that's the open, low, high, close of the previous candle. Open, low, high of the current candle. The C stands for close of the previous candle. All right. Now, looking at this template again over here on the right, top right corner, we have current price, spread, high, low of the current day or the current time frame you're looking at. Well, actually, it is all day. I'm sorry. The high and low of the current day. All this is day data except candle time. Candle time shows the remaining minutes in the particular candle or the particular time frame you're on. So here on the monthly, we see we have 3,790 minutes left. You know what I'm saying? Okay, so that's what that represents. Trade in 1, trade 2 depends on how many positions that on the current chart or pair you're on. I have 3 positions open, trade 1, 2, and 3, and right now they are down. Of course, as you see, trade 1 is 1 pip, trade 2 is -1.4, trade 3 is -5 pips. Those are pretty much standard when you open a trade, of course, given the spread is included in that. Now, once price moves to profit, of course, you won't see the minus there as you do see on there 1.1. All right, now we're going to get started on actually how to read the chart. A lot of people think it's really hard, but when you understand what you're looking for, it's very, very simple. Okay, right now we're just focusing on pure technical analysis. We're not going to get into any session times or things of that nature. I might mention it here and there, but we're not going to focus directly on that. Right now, we're just going to focus on understanding how to read the trend, find peaks, and find highs and lows of the day and current periods. All right. So starting with the monthly, just zoomed out. Of course, on my other videos, you'll see me do the top-down analysis. You'll see some of the top-down analysis implemented in this current video, but you'll mainly see trend recognition, okay? And what I mean by trend recognition is, of course, a trend is identified by higher highs and higher lows, okay? Lower highs and lower lows. Lower and LHs and LLs refer to a downtrend. HHs and HLs refer to an uptrend, higher highs, higher lows. lower highs, lower lows, okay? And when you're looking for a trend, you're looking at each individual candle as it's formed on whichever particular time frame, as well as the peaks that are created by the inner trends that form, or the rallies, okay? So just looking here at this particular chart, I'm gonna zoom, no, I'm not gonna zoom, I'm just gonna leave where we're at now, and I'm just gonna use the data that we can see here on the chart, all right? So if we start here, and just let me highlight this box area because this is the area we're going to work with first. So I'm referring to this area in here. All right, so referring to that area, that boxed out area right there. All right, looking at this particular trend, if we're gonna look first at this swing here, all right, at the beginning of the box, this swing down. Notice how each candle high is lower than the previous one, okay? Each candle's high is lower than the previous one, all right? I'm zoomed in a little bit here. So each candle's high is lower than the previous one. Each candle's low is lower than the previous one. So when you're looking at a swing, and that's just a rally of consecutive candles headed in one direction, forming lower lows or lower highs or higher lows, what you want to look for in that particular movement is a mismatch, so to speak. So in a downtrend here, indicated by this yellow line and these candlesticks, lower lows and lower highs need to be seen. Immediately, when you find some or a higher low in a series of downward downtrending candles, that is a key area you want to pay attention to. So just keeping things simple: higher, lower lows, lower highs, lower lows, lower highs, lower highs. But right here, we have now a higher low, but lower highs. So it's still in a downtrend, but the lows don't match. So let's identify or highlight that particular area, just straight across. It'll play a significant role for us in the future. Now continuing down, now we have a higher low and the trend changed. Notice how the trend has changed. The first higher low did not change the trend. The second one did. Okay, so now that we've seen that in that particular trend, we want to identify or indicate or point out or establish whether or not the very next candle after the one that created the last low in this downtrend was the high higher. This high is not higher than that one. So the answer is no. This area will be retested. Or so to say, the downward movement is not complete yet. Okay, it will be solidified by a candle such as this one. All right, so now we're moving up. We have higher highs and higher lows. All these candles indicate higher highs and higher lows. Higher highs and higher lows, uptrend. All right, until right here, this very big bullet bearish candle comes out of nowhere and drops. Notice how this low exceeded the previous candle's low that created the high. All right, so now we know this level is solid. It will be retested, but as far as we're concerned, the trend is still down, is now down and continuing down. Also, you also want to understand that that high does not exceed the previous high in that downward move. Okay. Now we have another series of lower lows, lower highs, lower lows, lower highs, lower lows until right here. This candle did exceed the previous high in this reversal. Okay, that's very important. Here we have another reversal. So as I'm following from left to right, and analyzing this trend here on the monthly time frame, it's giving me some great guidance in future price movement and price direction. All right, so now we're going to continue moving. Now look at, we have a series of lower highs and lower lows. Again, here, this candle represented the low. This is a doji or a hammer, shooting star. And then we have, again, a series of higher highs and higher lows. Now, in this particular situation, due to the pattern that formed, we would indicate this area, which is 82.5. Now moving forward, as you see, we have a series of higher highs and higher lows. No coincidence that this previous support level that turned into resistance here is still holding as resistance. Support, resistance, resistance, resistance. All one level. All right, again, I'm on the higher time frame, so this is these are big moves. Well, you'll understand and you'll see how every time frame is the same, it's just a different amount of time. All right, so now right in here in this previous swing that I did from here to here, let's look at the higher highs and higher lows. Notice how right in here, these lows are lower than this. So this actually ended the downtrend. We have higher highs, higher lows. And then right here, we have a lower high and a lower low. So in fact, we could look at this trend like this. And then we push back up with another series of higher highs and higher lows. And then right here, we turn. I want to highlight this area here in where we pause, because it's going to play a significant role in the future. This level was never broken again. All right, price, lower lows, lower highs, higher lows, lower lows, lower highs, higher lows. Now that area that we drew and mapped out, look at how we can pull it all the way across. All right, price never exceed below this level ever again, once this particular pattern created this trend and this structure. All right. So it's very important that on whichever time frame you're looking at, all you really have to look for is higher highs and higher lows in a trend, mark it off, and those levels will, in the future, if you go back in time, those levels that you mark off and indicate in the future will give you areas in which you need to be anticipating a trend and what patterns you need to be looking for to appear in those particular areas. So since this is the monthly chart, you really only have to do the monthly chart one time. Okay, highlight and do these areas one time on a monthly chart. All right, and then you'll simply come down to the weekly. Again, every time frame creates and makes up the next time frame. So now here on the weekly, this is what we're looking at. Same markups we did on the monthly, except they're from a different view. Of course, it takes more weeks to form up a month. So these are the patterns that are forming inside of the month at those structures. Now you can do the same thing. You're looking for the trends. Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and you're looking for the trend. And in those particular trends, you want to start identifying the same thing we look for on the monthly. So just to get started, I'm gonna zoom in and I'm gonna use the data that we have here. We already have our monthly zones in the directional bias in which we need to be looking to take these particular trades. We know if on the monthly, this is a supportive zone, we need to be looking to buy anyway. So already we have a bias for buying the USD CHF based on the monthly time frame. The monthly and is the largest time frame. So you always want to trade in line with that particular structure. All right. So now looking here at this particular monthly, at this particular weekly, we can do the same thing we analyzed. We know this is an uptrend, higher highs and higher lows. This was a downtrend. And let's highlight it. Boom. We have that particular low. Now we're in the higher highs, higher lows. Boom. That level pretty much matches up with the same level we drew on the monthly right here. All right. This is the high peak. This is that low. The high, the candle that precedes right after that, highlight that low. So if you're in an uptrend and you're looking for a reversal, you want to, as soon as that peak is formed, the candle that forms the lower low and that reverses that trend, highlight that low, okay? Because that's going to play as key support and resistance. Notice how it's hit a couple times here. This particular level right here, support, resistance, resistance, resistance. All right, we're likely coming back to that level now or over the next coming weeks or this quarter rather. So now we're downtrend, 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 low, high, low, higher high, right at that same level that we previously indicated. And we got a downtrend, downtrend, uptrend, high, low, right on a previous structure zone, right here. And we got downtrend, 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 downtrend. Notice how this downtrend stops right where we indicated a higher on the monthly time frame. No coincidence. It's very, very organized. Then we got an uptrend. Then we got right here a high. This is very important due to where we're at right now in price. We got this high, the trend reversed, and the low that formed here is where we're at now on price. So I want to go to see exactly where that is. If you hover over the close of the particular candle, you'll get all the stats. So this low was at 92,321. So let's put this here. At 0.92321. We know that's the low of that particular candle that we are trying to be precise with, this one here. Now, given that that particular trend or that particular level is highlighted, and looking at where price is now after this downtrend and this uptrend, and it played resistance here, and now it was broken, retested as support, this is a very ideal area in which we want to enter. We simply, now that we're done with the weekly, come in here to the daily. Here at the daily, looking at that particular area that we just analyzed or marked off on the weekly, look at where we're at on the daily. All right. We could go through and do the same exact thing that we did on the monthly here to the daily. All right. We got a downtrend, 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 low, high. The candle that formed the low, the preceding candle is formed the high, which caused the reversal. Highlight this level here, right on top of this candle. That was right on top of this candle here. Also, if you look here, low, then we're looking right there, double bottom. Uptrend, uptrend, downtrend, uptrend. Here's that downtrend over here. Because in that particular uptrend or a downtrend, we know where the downtrend stopped or this uptrend, high, low. low, high, high, low, high, low. So we know here is the level in which we're indicating or paying sharp attention to. All right, over here, support, support. Now we're bouncing. Now this yellow line is again, is that line that we identified here on the weekly as a supporter. We're down here on the 30-minute now. Oh, I'm sorry, we were on the daily. All right, we marked up the daily. We know now we're now we're closing in on current price. 4 hour, here's the 4 hour. Uptrend, uptrend, uptrend. Notice how we are above that particular zone. So that's likely bounced as through support. Now it's retesting as support. Going to the hour. Here's the hour. Again, we broke through. Uptrend, 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 downtrend. Notice how we're right here. This candle formed the low. And now we're getting into the 30-minute. And now we're starting to corner pricing. You see, I have some buy entries here. I'm actually move those out of the way for us because we can see the actual price over here on the right. So I've got some buy orders in down here. We're at a supportive level for the monthly. The daily has reached our level for a bounce. We have a nice reversal pattern. We can go and keep going in all the way down to the 15-minute. Now here on the 15-minute, we can look at some key features. Downtrend, 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 downtrend. Here's the downtrend, low, high. Okay, high, 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 low, supportive. So we know right in here is our area of supportive interest here based on what we've analyzed on the higher time frames and where we're at now with price and looking at real-time price action. We know what to be expecting here at this level. We are expecting buy situations here at this level. We are all the way at the prime entry level for this particular setup that's formed. Prime. All right. And that right there is in a nutshell how I'm able to identify and read any chart. I don't care what chart it is. I'm just looking for patterns, trend, and structure. All right, ladies and gentlemen, I hope this video was able to offer some assistance. We'll get in more detail, of course, in future videos, but that was just a preliminary, a simple approach to understanding the currency market. You don't have to be scared of the candles. I know it's a lot for new people, but that is, in a nutshell, the simplest way to understand and identify, of course, future price movement. Thanks for tuning in, guys. I'll see you next time.